All right, week 17, outlook number 1, starting with the pound futures, going out to the 4-hour time frame. We've got a lot more price action developing. We're still actually existing inside of the range, which is I'm sorry, let me zoom out. We're still inside the range, existing from this high down to this low. And then I have a bunch of markups here because I'm looking for opportunities. But what we discussed last time was breaking structure of these highs, and then we got consolidation. We had a liquidity draw that ran that low that caused a break of structure. Then we look for opportunities here, and then this actually got drawn on liquidity again. So we got 2 liquidity draws back to back. This one seems more sufficient. And so because of that, when we zoom in, we've now created inefficient pricing, but specifically a price gap for opportunity. And I'm going to go ahead and clear up some of these marks here. Okay. And yeah. All right, so that's what we got here. Clearing up some of the markup. What we have is this price gap that is what we're looking to play off of. We've already mitigated 50%, so 100% is definitely valid. I have this marked up here for a potential opportunity, which would be a 15-minute sponsored candle play, but that's not the point of this. So yeah, what we're looking at is continuation of bearish price action after we stalled and transitioned from bullish price action, which is what led this move to doing what it did. And now we've broken structure. We reached into the premium side of the range, and now we are looking to move lower into the discount side of the range. And so this price action here is the transition I'm, analyzing to be the transition of bullish price action. We got liquidity draw, break of structure, liquidity draw, break of structure, and then we got a pullback into area of interest, and we should be looking for opportunities to sell lower, with the target being immediate low here, next low there, and because we're in a range, this would most likely be the ideal target. And then if you're looking to swing and hold with the confidence in the bearish bias, then obviously, yeah, continue to hold. But yeah, this is what I'm seeing here on the pound futures. So moving on to gold. Yep, nothing. Still ranging, still oscillating around equilibrium. Nothing to say there. All right, NASDAQ. So the NASDAQ has been on an absolute bullish tear, which makes sense. And so the reason why I say that is remembering that even though we were in a range similar to the pound futures, this is a bullish range. As in a bearish range for pound futures, we should be assuming continuation of the bias, or like that's the sub bias that we're looking for when we're inside of a range. We expect it to break out to the low side. Whereas in the NASDAQ's perspective, we're in a bullish range. So we should have been expecting, a pullback to mitigate whatever inefficient pricing is on the discount side, balancing the range, because we had already explained that the premium side had been completely balanced. I literally said there's no inefficient pricing here. It's only going to be if there is any resistance to the motion moving higher, it's going to happen at these highs here, at these liquidity points inside of the range. And you can see that if you track them, there was, very subtle responses at those highs, but the liquidity was definitely not strong enough to keep it from pushing higher. And so that's exactly what we ended up getting, was price pushing higher. And now we're looking for either price to take off the high now we're looking for price to take out the high. And once it takes out the high, then we need to assess, or actually, did it already? I am so sorry. The range is broken. We actually got a liquidity draw on the range high. So that actually changes a lot. So one, this range is complete. We got a liquidity draw. And so now we're actually in a transition period. I'm so sorry. I was BSing. This range is now gone. That was a liquidity draw. Actually, let me back up here. We have a liquidity draw of the range high. Wow, I didn't even see that. Here, like so. All right. Ooh, that's kind of interesting. So yeah, we got a liquidity draw of the high. So now we are in a very interesting transitional period. Is either excuse me. Either this is about to pop or this is about to drop. And it's all going to be based on the response and validity of this liquidity draw here of the all-time high. Now, if we do get the, the drop, oh my goodness, that's going to be crazy. If we get the pop, then that's just, continuation of the bullish price action that we're seeing right now. All right. So on the Dow Jones, we're in a very similar predicament, but we're actually still inside of the range on the Dow Jones. On this one, actually, we did get a break of structure yet again here at this high. So we potentially could be looking to target the next high to rescue or to activate some sort of liquidity here. But we're still inside of the range. We've taken out this high, so we could be looking for this high, or price could, be satisfied with the response at that high and just roll over. But we'll see what happens. Obviously, if we, break structure, then we should be looking for the next liquidity point to assess the action that we want to take. And then, yeah, what's this? Is oil not really doing too much. It's just liquidity draw after liquidity draw after liquidity draw, and it keeps drawing lower. There's not really much to say about it. It's not really trading. So similar like gold. And then, yeah, the cattle futures is, oh, we had a little bit of pullback on the cattle futures. Cool. All right, that's week 17 Outlook One Piece.